Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, March 23rd, 2016. Now listen, folks, markets are seeing some good selling today. Not a huge down day, but it should be the beginning of more downside that'll take us into next week and the following week. We look for a pretty sizable pullback, literally 5 to 7% off of the highs here. So again, we're not going to right away revisit the lows that we saw, month and a half ago, but we should get a nice pullback here. Now, I can tell you that we told our members here at InTheMoneyStocks.com that this would happen on this very day. This exact day is when the market would start going down. I want to show you how. And this stuff should blow your mind. I mean, it really does, because it blows my mind, and I know this stuff. But bottom line is, there were two things that were unbelievably key. And I want to go to the daily chart of the spiders. You were looking at the intraday 10-minute. Spiders, again, guys, for those of you that don't know, that's the S&P 500, basically, the tracking ETF. So you're looking at the S&P 500, essentially. Take a look. Look at this chart of the spiders. So look at, this is the S&P. What the S&P has done, big fall, bounce, pullback, huge bounce. Big fall, bounce, pullback, huge bounce. Notice the similarities here. So if I zoom in a little bit, take a look. From this low to this high, 244 points on the S&P 500. Remember that, 244 points. In addition, it was 26 days from the low to the high. Remember that, 26 and 244. Same exact pattern here. Here, remember, big drop, bounce, pullback, huge bounce. Big drop, bounce, pullback, huge bounce. How many points do you think from this low to this high? 244. Isn't that amazing? Literally give or take a point. I mean, it's right there. You want to know something else? How many days do you think from this low to this high right here? The recent high. 26 days. Now, why did today, now granted, the high was a couple days ago. Why was today the key day for a fall? That's the second part here. The answer is very simple. If you know time counts, today was the time count. Meaning that cycle work, this is getting a little more advanced than most of you guys, I'm sure. But bottom line is, when you understand cycles, there are certain repetitive numbers that occur over and over again. And that repetitive number is a key when a market shifts direction. If a market's selling sharply into that time count, oftentimes you'll see a reversal. In this case, we were going up sharply, therefore you expect a reversal down. And today, we called it days ago. Even last week, we said this coming Wednesday, if you're going to see the selling pressure, it's going to start today. Now, most people don't believe it. Most people are like, oh, we're going into a holiday weekend. They're going to float this market up. This market's not going to. No, that's BS. That's bullshit. People that don't know that stuff, I mean, they're just following the crowd of CNBC. You learn this stuff, you can literally make millions of dollars. It's incredible. Absolutely incredible. I want to show you something. Here's our website. I want to show you the track record. All right? Go right here. Investor Trade Alerts. Click on the Research Center. This is where we give our live swing trades out. I'll refocus and put it this page so you can see it here. 7-day free trial, first of all. Make sure you take that advantage of that. That's awesome. Down here, track record. I closed out 2 trades today that I knew, because the market was falling, I knew was going to be very beneficial to us. Take a look. We just closed out DWTI, which is a 3-time short on oil, 18% gain. All right, literally we held that from the 18th to the 23rd. And there was a weekend in the middle there. So literally for 3 trading days. That's sick right there. That's awesome. Look below it. Gold miner short. In at 290 on the 17th, out the 23rd at 355, 22.5%. Those are just today, folks. And we have a ton, because we knew the market was going to fall today and should continue next week, we obviously positioned ourselves accordingly to the short side. And so now we're starting to get paid on that as the market falls. My point is, here's the track record for this year, 2016. We're in March already, 276 almost % gain. All right, every trade that we've taken and closed out. You want to see past years? Do the drop down. All these years you can view the third-party verified track records for all these past years. All right, but 2016, promises to be a banner year of amazing price action. All right. So my point is, go right here, Research Center, click on the free trial. It's a no-brainer, folks. It is a freaking no-brainer. Take care. Hope to see you soon.